Hi guys, welcome to my channel, and today I'm going to be showing you guys the balance sheet and explaining how it works. So if you guys ever want to buy a business, you could know the basics, and when they give you a spreadsheet, which would probably be a balance sheet of their incomes and everything with the income statement and maybe cash flow statements. So my parents were going to buy a business for a hotel, but they're first generation Americans and they don't know as much. So I wanted to help you guys just in case if there's anyone out there that doesn't know that much about financing or anything, I could help you guys because I know how it is. It could be hard sometimes. So the assets are everything that the company owns, and what the assets are made up of are the liabilities and the shareholders' equity. So the liabilities and the shareholders' equities are, or the owner's equities are just like a part that equals to the assets. So this part should approximately equal to the assets. So as you can see, the total number of assets on each side of the current year and the previous year, they both match up down here in the statement, which are about approximately the same. But the liabilities are what we used, like such as loans or anything, to make up the company's worth, to make up the assets. And the equity are like the amount of shares a company might have or how much, like whatever it builds up to the assets. So these two end up making our assets. That's the basic equation that everyone should know. So first, we're gonna start with the most liquid items. So the most liquid is how close it is to cash, basically. So obviously we would have cash first, and then over here we have the 2 years. So we have the previous years and the current years. These are just telling you the differences in the 2 years, which like show us the progression overall. So first we have the cash, obviously how much cash it's generating, and then how much it's making from its investments. And then inventories are just like anything that they have, like it could be like computers, desks, anything that they own. And then on top of that, they have the accounts receivables. So accounts receivables are like something like you already did the work for the company, but like, or a company or like a person, but you still haven't received the money. So you will be receiving the money. So that also counts as one of the assets because that's what's going to come into the overall pay. And then the prepaid expenses are the expenses and they're already paid for. And then others could be like literally anything else. And this is what makes up the total assets of a company. Next, we have the fixed assets. So fixed assets are like something that are like fixed, like they'll be there for a while. So some of it would be like property and equipment. Like let's say you have a computer. A computer will last a long time, a long amount of time, probably over a year. So basically fixed assets like last over like could last around like 4 or 5 years depending, but it lasts a long term. And over here we can see how much it's making. I mean how much it's worth, how much worth of equipment and property we have. And then we have leasehold improvements, and then equity and other investments. So this could be like any other investments that um, could make up the business. So I would say to look at these two. So the current assets are usually like first because they're like current, like what we have right now type of things, and fixed assets are like what we will have for a long term amount of times, and it could be something you have right now but it'll just last like longer. Current assets don't usually last that long, and it's different, it depends. But so then we have the total fixed assets, and we add the current assets and fixed assets to get our total assets, which are the amount, like the overall, how much the company has and it owns. And then we have just additional other assets that may not like fit in these two terms. All right, next we have liabilities, and owner's equity. So liabilities and owner's equity, these are important. So let's start with accounts payable. So accounts payable are the amount of money that we owe but we haven't paid yet. So this will, well, not, yeah, it's about like how much how much we have to pay to someone, because okay, so it's like a loan. You took out a loan, and you took the loan and it's for the business, and after that you're going to have to pay it back one time. But that's not what we're going to look at. We're going to look at how these add up together to make the assets. So the loan we took, we could use for the business, which is right here. And then we have the accrued wages, and then the income tax payable, like the taxes you will be paying and everything. And then the unearned revenue and all types of other stuff right here. Oops, I didn't mean to do that. Wait, let's go back. Yeah, and then total liabilities. So these are how many liabilities we have, something that we owe. These are the current liabilities, so these are like for now, and these are the long-term liabilities, which are mortgage payable. So mortgage payables would be something that, let's say you have a mortgage on the house, you're taking loans to pay for it, and you're gonna have to pay it back eventually, but whenever you have a house, let's say it's worth 300,000, you're not gonna go around saying you paid 100,000 overall so far. You're not gonna go around saying your house is 100,000. You're gonna say it's 300,000 because that's how much it's actually worth. But you're just using mortgages monthly to pay off it, and you're slowly earning and earning the more value of the house. So that's what mortgage payable is, the mortgage that you're paying and everything, which also help equal the assets and liabilities, equal assets. Okay. So next we have the owner's equity. So we have the investment capital, which is like a money of the investment. Capital is basically another word for money, but in like investing terms. And then accumulated return earnings, or I mean retained earnings, are the retained earnings are the things that, like, the shareholders don't, they want to keep the assets, I mean not the assets, they want to keep their share a part of the company, and they don't want to take the dividends out. So you're not taking any of the dividends out, so you're just keeping it in the owner's equity, so it overall brings it up together. But as you can see from all of this, we have the balancing at the end. So we have the 400 million approximately equal to 4.8. This is the balance that they're showing, and the total liabilities and owner's equity equal the total assets. For each, it's approximately the same. It might not always be the same, but the equation is assets equal shareholders equity plus liabilities. So yeah, this is the balance sheet, and this will help you a lot in learning about acquiring other businesses and knowing more in general, because I know that a lot of people do not have like a basic understanding of these crazy looking sheets. You might be able to like understand some of the basic terms like cash, but there's some crazy words that people won't know, like depreciation. Let me tell you, depreciation is like when, like, say it's something's worth something over, as years go by it starts rusting or it's not as good. Like a car, as it's going by, you're using up the mileages, the worth of the car is going down, how much the car is worth is going down. So that's what depreciation is. But yeah, there's lots of terms and everything, but this is the overall format of the balance sheet. But I hope this video helped you guys in understanding more about the balance sheet and how it works. So if you guys ever want to buy a business, it will help you. And for all the first generation Americans who are trying to buy a business, this is a great fundamental in knowing and how and everything in general to know when you're buying a business. This will help you read businesses and statements and everything. Thank you for watching this video. Have a nice day and make sure to hit that subscribe and like button. Thank you.